I'm Jack Woodruff. I work for Nexus Trade Credit. My role, I head up the non-cancellable underwriting team. So we offer trade credit insurance with certainty of cover offered by non-cancellable credit limits. So we can't take your cover away during the policy period, and we also write cover on a top-up basis. So when your current insurer can't quite write the full credit limit requirement you need due to capacity issues, then we can write top-up cover to plug the shortfall in cover. I mean, there's a few broad issues at the moment. Obviously, there was the Russia-Ukraine war, which came a little bit out of the blue 12 months ago, and that's brought about a number of inflationary issues. So shortages of supplies of grain and things like that. The embargoes on oil prices against Russia have caused spikes in the oil price, and a number of these things kind of have brought about quite significant inflation, which is something we haven't had to contend with for a number of years. Just a number of kind of things that businesses haven't had to deal with over the last kind of 10, 20 years. So yeah, those are definitely two key factors: energy price inflation. Yeah, that would be one of the key challenges. In the UK, certainly still on the inflation trend. So food price inflation is impacting the cost of goods at the supermarket, and that's bringing about reduction in consumer spending. So certain sectors like retail are having challenges. So all of these things kind of add up to quite an uncertain economic environment in the UK at the moment. There's a couple factors at play in the UK credit insurance market at the moment. So we're coming off the back of a period of quite low insolvencies, and therefore we haven't seen that many companies go bust during the COVID period, and therefore most insurers are seeing quite low loss ratios. As a result of that, we're seeing quite competitive rates, certainly on new business and renewals. So there's downwards rate pressure. But at the same time, we're seeing the economic environment shifting towards potential recession in the UK, and those two kind of don't tally up. We're getting cheaper and cheaper at a time when the risk environment is getting worse. So at some point, we're expecting those two factors to kind of collide, and we're expecting rates to kind of reverse and start increasing again. Trade credit insurance is a prime example of a product that allows companies to trade through these challenging environments with confidence. So that's kind of what gets us up in the morning, is allowing British businesses to trade confidently through these periods of quite extreme volatility. So whether it's inflation, whether it's the construction sector seeing a spike in insolvencies, with a credit insurance policy, you can keep trading and safe in the knowledge that you will get paid for the goods that you're selling on credit. So definitely one of the things that companies can do to help them trade through. Challenges in terms of the economic volatility. I think companies should be well informed and flexible to adapt to a changing world. I think we saw with COVID, things can come out of the blue that can create significant problems for businesses almost overnight. So it's best to be flexible as an organisation and be able to adapt to challenges, because if your competitors can adapt or can't adapt, you're able to kind of be ahead of the curve if you can be flexible and nimble. Certainly from our perspective, being very informed about economic developments, it allows us to kind of work with our clients to kind of work around difficulties in the economy. Companies should position themselves with being flexible as they can, and so that they being aware of trends in the economy, so that they can avoid difficulties in subsectors within within the economy. I think, again, coming back to positioning themselves with things like our product and credit insurance, we give access to a risk underwriter and the decision maker to every client. So we're more than happy for our clients to pick up the phone, talk to us about whether they're concerned about a buyer, a sector, or anything. So that's certainly something that companies can do is use the information that we provide them. We release sector reports talking about what's happening, what we're seeing in terms of insolvencies, in terms of economic output and activity. So another thing that, again, they can do is to keep themselves informed of developments within their sector and try and work around them. It's a combination of things. It's allowing companies to trade confidently when times are hard. So I think as a whole, credit insurance as a sector allows companies to not have to cut jobs as significantly as they might have to in a recession, because they know they're going to get paid for the goods that they manufacture and sell. It means that they are the finance directors, people who are buying policies, are able to sleep better at night, and it allows people to trade more on credit terms and longer credit terms than they might otherwise do, and that just allows companies to have that extra liquidity in the supply chain, which we think is a positive thing that credit insurance brings. From us as a business, one of the biggest challenges we face over the next 12 months is the combination of our two underwriting platforms into the SCHUMANN system. So that's been a project that's been underway for a number of years, and we're really excited about the systems being combined, the merger of kind of our whole turnover product with the non-can side of our business, which has been the one that's used the SCHUMANN platform historically. I think that's going to be a real game changer for us as a company. I think we're going to be a lot more kind of future-proof. We're going to be able to develop along with the market, alongside things like building API feeds into our system, and having a more reliable and modern platform is really going to benefit us over the next for the next 5-10 years. So it's a huge project we've been undertaking, but we think it's really going to be significant for Nexus.